I need to talk about my background in business for a moment. I'm just taking a look at how currencies are dying around the world. A lot of people don't know about them because they aren't in the news. Egypt lowered the value of the Egyptian pound by 40% in March. Now the UAE is coming to save it. There is also devaluation going on out there. You see Japan. In other words, it had to step in. What's going on here? It's really cool. Bitcoin is one of the things I think is going on. There is an insurance plan out there, That was the first thing that came to mind. A plan for protection. What if I just play around a bit? Anyone who did that in Nigeria or Egypt is another one, about 50 to 60%. To the extent that these poor people have any money or goods that can be bought with that one currency, they are learning every day. They know how to make this different, and I need to do it. Most people around the world don't know that currencies are losing a lot of value right now. A lot of foreign currencies are losing value right now, even big ones like the Egyptian pound and the Japanese yen. The yen, which is the world's fourth biggest currency, is hitting lows that haven't been seen in decades, if not ever. Even though these events are in the news, most people still don't know about them. Cathie Wood recently brought this problem to our attention and said that it is because of modern monetary theory, which says that central banks should keep printing money, which means that fiat currencies will eventually fail. This time, though, Cathie shows a way out. Bitcoin. She says that Bitcoin will go up to $1 million per coin by 2030 because it has a fixed quantity and is naturally rare. This is now her base prediction. This makes me think of the early days of Bitcoin. While we were learning about it and writing our first white paper with Art Laffer in 2015, he said, whoa, wait a minute as he read it. My wait for this has been over since we shut down the gold window in 1971. He said, I've been looking for a money system with rules. He was, really interested in it. And more so. Rod, you've already met him. Yes, he is also in Tennessee, in Nashville. It makes him so happy to think that we might be able to go back to private money and get the Fed out of the picture. As someone who invests in stocks, I can tell you that the idea that Fed Chairman Powell can speak out and all the other governors can say no is a bad one. And the stock markets go crazy. They say it's been really annoying and getting worse over the last few years, which makes everyone freak out. As someone who has lived through many cycles since I was in college in the late 1970s, I find the idea of a global, digital, decentralized, private, rules-based monetary system that is not supervised by the government to be pretty interesting and deep. But that's when I got into the stock market. Also, I remember seeing money get out of hand when I was young, and I've always been interested in how to fix things. So when we stumbled upon Bitcoin, well, everyone did. I thought, wow, this is pretty cool. This could change everything. I asked Art, how big could this be back when it was $250? He then asked, how big is the US money supply? So that was $4.5 quadrillion back then. There are now $7.5 quadrillion in it. That needs to tell you something. He then said, that's it. We've been going with it ever since. Could it play one of the three parts that money plays? We wrote our first white paper. That's what we came to, yes. It sounds like a bell for a new type of object, yes. Because of the halvings, the rate of growth of the Bitcoin supply is now lower than the long-term average of gold supply growth. This one drops from 0.8 to 0.9. Another difference is that when I tell people this, it's like a hey-ha moment for them. The difference is that when the price of gold goes through the roof, miners start digging more, which increases the supply. And when I say that in the trading world, that's not possible with Bitcoin. They look at each other twice again. So now we are below the growth rate of gold for the first time. Stan Druckenmiller says, well, gold is a 5,000-year brand. At least that's how he says it. Bitcoin has been around for 10 years, so I should pay more attention to it. And I think cutting in half is another aha moment. Spot Bitcoin ETFs have been allowed, and there's been a net new Yasin of, I don't know how much. I have no idea, but billions have come in. These are the people who were in Bitcoin during the last halving. Many of them probably weren't there during the last split. Of course, they say, oh, with the halving, that means Bitcoin, the price is going up. Because they saw the same thing happen in 2017. Before it happened in 2000, I think it was 2021. There was a little buzz. This means that the financial market is already set up with hopes. Bitcoin will go up because of this great event. However, the Bitcoin ETF adds a whole new level or type of player. What they do if this doesn't go as planned or if the price goes up after half will be interesting to see. What do you think, Yasin? Yeah, I agree with both Mike's point and yours, Cathie. The way mining works is very competitive, which shows the unique free market aspects of Bitcoin that you don't really see in any other industry. To Mike's point, hash rate is going up and to the right. The turnover, or the companies that are making the hashes, also looks very different from 10 years ago. So, really good job, Mike and Harry. If you can make it through multiple market rounds as a Bitcoin miner, that means you are very ready. But there's also the growing worry that mining will become too centralized, and there aren't many people mining Bitcoin. The turnover for both mining pools and mining companies, on the other hand, is very high. And I think a lot of people don't understand how important it is for the price to stay the same during huge sell-offs and times when the hash rate drops. I believe the China mining ban is a very clear and, I would say, important example of how mining was centralized in China. They stopped letting people mine. The hash rate dropped by 50%, and a new group of people said, okay, if hash rate goes down, we'll buy your rigs and set up shop also. This is going to be a whole new environment. I believe that is a free market dynamic that only exists in an environment like Bitcoin. The price of the layer above that, with things like the Bitcoin ETF for institutional users, will be set by how buyers and sellers act. And we still don't know how big of a holder this ETF basis will be. But I can promise you that there will be buyers of last choice. There will be a turnover of the real holders if there is this mining death trial story. On every level of the stack, though, there will always be a need for it. And I think that's kind of what you and Mike are saying here. 5 lines of code are probably the most important thing I've learned here. That's something I didn't know. I didn't. That seed just set off this Cambrian boom, as we'll put it.